Hi folks, this is Frank speaking to you on Thursday, March the 6th, 2008 in the evening when I otherwise would be trading, but I'm still in project mode for better or worse, which means I don't have any actual book trades to show you, but I got some interesting examples nonetheless. We're going to revisit the Four Sisters trade yet again. I've just received an absolute boatload of email that's just continuing even still. And I've gotten far more correspondence from you folks on this subject than I have on anything else that we've talked about to date by a long shot. Just way more email than I could have expected. So that tells me that you're interested in this trading system, that people are after an easy-to-use, effective system that doesn't require a lot of extra planning or analysis or whatever you want to call it. Fair enough. If that's what people are interested in, we'll spend a little bit more time here than I was originally planning to do. So we're at COTW number 20 now. That's kind of an interesting milestone number. We got 20 of these episodes down, another half dozen to go. Kind of staring down the finish line a little bit. And I think it's an interesting pause to reflect where we've come from. It's hard to believe that we started doing these all the way back in September, I believe, if I recall correctly. And all that we've talked about since then and all that's happened in the market. Of course, if you were to revisit some of those earlier episodes now, you would have heard me talking about some long-term, very bearish projections for both the Dow and the carry trade, including the pound-yen, which is our most popular pair that we look at in this course. And it's interesting to see how it's pretty much unfolded as according to plan. This week pound-yen came awfully close to 200, and I think it was back in October where I made the statement that it was likely we could see this thing broach 200 in the new year. It's getting awfully darn close, and I think the Dow is just getting ready for a next big leg down. So interesting times. Anyway, let's move on to this week's chart review. What's on tap? It appears Pabst Blue Ribbon. I'm kind of the king of corny pictures here. I hope you can bear with me. Anyway, what we're talking about this week, we're going to look at some Q&A items. I'm kind of trying to distill the essence of the more regularly asked questions that I've received in a lot of the emails. I mean, it's a wide variety of stuff that people have been asking about, but I wanted to address just a couple of generic issues. I wanted to provide an example again to show how to validate the 3-minute setup against a next higher indicator reading. It seems some people are still kind of having a bit of a challenge with that. And then finally, to cap it off with just a quick chart-by-chart rundown of the trading opportunities that were available heading into today, March 6th, during the London session. And what we're going to see is that not every chart that we look at is going to be particularly exciting, but as you'll see, there's a very important reason for doing this, and what we're going to learn from that review. So here is my best attempt to distill the essence of the most frequently asked questions pertaining to the Four Sisters trading system that I received over the last week or two. I'm not quoting anybody's email here. I'm just trying to convey the essence of these questions. So first of all, question number 1, are there certain times of day when the Four Sisters trade works better than others? I'd like to show you a chart example to answer that question in just a moment. Question number 2, I can't get the 800 EMA to appear in my chart. What do I do? I'm going to give you a quick little ultra-fast tutorial in both AccuCharts and Pro Realtime. Now, I have received an email from a certain person who doesn't like tutorials, and believe me, I'm not trying to do this to offend you, person X. I just want to address quickly some of the questions that have come through, so I'm not going to take a lot of time with this. Please bear with me. Question number 3, do I really have to wait until I get a parabolic reversal? Can't I just get in on the stochastics crossover? The short answer to that is you can if you want to, but I don't think there's much point. Again, I'll show you a chart example to answer that question in just a moment. And finally, I seem to keep trading against the trend and I get stopped out. What do I do? The very simple answer to that question is don't trade against the trend. That's all there is to it. But I don't mean to be facetious. We'll actually we'll take a look at another look at this validation tool that I talked about earlier and see if that can help. Anyway, those are the questions. Let's see if I can provide some answers now. To address the first question, is there a particular time of day when this thing works better than others? I'd like to answer that with reference to this chart. This is a 15-minute chart for pound yen for the period of February 28th to March 6th. And I thought the easiest thing to do was to just sort of, over a period of a week, let's just sort of see if there's a clustering of times when we get set up. So I've just highlighted on the chart here. We see very clearly that the Four Sisters trend reading signal is down. We're in a bearish downtrend. Our first signal came February 28th, 8:30 a.m. Eastern Standard Time. So that's the New York Open, right at the New York Open. The second entry, short, came March 3rd at 14:30 Eastern Standard Time. That's 2:30 New York time in the afternoon. Not typically regarded as the highest probability trading time of the 24-hour trading clock. It's not an important session open or close. We're just kind of mid-afternoon. Would have kind of assumed traders in New York are more interested in the commute back home. But there we go, 2:30 in the afternoon. The next one came March 4th, 4:30 Eastern Standard Time. That is equivalent to 9:30 in the morning London time. That's news hour in London, England. And if anything's happening news-wise for the British pound, that's when it's going to hit the wires. The next one we've got is 2 a.m. Eastern Standard Time, March 5th. That's exactly on the Frankfurt Open. It wasn't a very long-lasting move at all, but all of these ones I've marked off here, I just double-checked, and they were good for 25 pips each, which is interesting because you look, for example, at this trade here. This kind of demonstrates why sometimes it is good to be in and out of the market quickly, because we got our 25 pips just barely, and then we got quite a pullback. And certainly this little wick here, it's very small. I apologize for that. If you can see that, it might have come very close to taking out our stop here. We had another trade was worth a lot more than 25 pips here, and then another one that was worth a bit more than 25, but certainly it was a quick trade before price snapped back. Then finally, the last short move before we started to see a bit of change in direction here was March 5th at 1400 Eastern Standard Time. Again, mid-afternoon New York time, not a particularly significant time of day. So you should probably think about trying to replicate this analysis on a few other pairs, particularly the ones that you trade if it's not pound yen, and see what kind of results you get. This is a 15-minute chart, so it's not to say we would have gotten some more trade setups at some slightly different times if we were looking at just at the 3-minute chart. But on this 15-minute chart, we can see that we are really all over the map. We had back here, we had one session open, the New York session, then we had a fairly nondescript time of day, mid-afternoon. We had London news time, we had Frankfurt session open, again back to New York mid-afternoon. So it's kind of suggesting that setups can come pretty much any time of day. It just depends when you want to trade, based on how you fit trading into your lifestyle and so forth. Personally, I trade the London session every night. It's very late in the evening where I live, but that's my preferred time. I'm almost guaranteed. I don't want to use that word too liberally, but almost guaranteed that I'm going to find at least one of these trades every single night of the week. And if I'm looking at 4 pairs, 4-pound cross pairs, and giving it a good 4 to 6 hours a night, there's no reason why I can't pull down 2 to 4 trades per night on pretty good night. The examples we're going to go over actually show not terribly compelling market conditions, but still able to pick off 2 trades. So anyway, that's all I can really say on that subject. Is there one time a day that works better than others? Apparently not. Apparently you can find these setups, whenever they choose to happen. That can be any time during the day. But as a generic rule of thumb, if anything important is going to happen, it tends to be around either session opens and closes or news hour. That's your best bet. But if you can't do that, fear not. These signals will happen whenever they choose to. Question number 2, I can't get the 800 period EMA to appear in my chart. What do I do? Well, let's take a look first at AccuCharts, and I'll show you a handy little technique to address that, and then we'll take a quick look at the settings tool for Pro Realtime, aka IT Finance. Here is a 3-minute chart for AccuCharts, and what we can see here is that we've got an EMA that's kind of truncated. Actually, in this example, it's not too bad. It goes back, well, a good 10 or 12 hours anyway. But maybe you want to zoom out and take a higher level look, and if that cuts off that quickly, it's not going to help you. So what you want to do is you want to right-click anywhere on your chart, select Properties. You can see this window comes up, and then to the left here we have a general section, and the first item is called Time Region. Click that open, excuse me, and there we go. So we have a number here, records. That's the number of records this thing shows. And what it's doing, it's defaulting in this particular example to 960 bars. 960 bars happens to equal 2 days worth of data. In a 24-hour day, of course, there are 1,440 minutes. You divide that by 3, you get 483-minute bars in a day. So 2 days would be double that, or 960. So we can see that's the number showing up here. So let's say that you're not satisfied with that size of a file, or that number of records, I should say. What you can do is figure out the equivalent to get 1 or 2 weeks worth of data, or however many weeks you want. In AccuCharts, you can specify the number of records, as is indicated by this dialog box here. So, for example, to get 1 week, you would go 480 bars per day times 5 days. That's 2,400 days. And if you want 2 weeks, of course, you would just double that. So let's specify. Actually, let's specify 2 weeks. So what I'm going to do here is type in 4,800. That's going to pull in 4,800 records, i.e. bars. Click OK. And what I want to do now is zoom out. But I can't really do that. But anyway, you can see I'm limited by my recording software here to the size of screen I can use. But we can see that now that I've specified a larger data pull here, you can see that whereas before the 800 EMA was getting cut off, it's now that problem is solved. It's going right back here. We're getting cut off just because of where I am on the chart here. Bear with me half a sec. It's been a while since I've used AccuCharts. I can't remember. You have to sort of you have to adjust the frame here as the data goes up and down. But anyway, make a long story short, what we did here, whereas this thing was cutting off after a couple days back here, by extending the data to 2 weeks, that's not a problem. So we can see our 800 EMA clearly painting in. And that's just a real quick rundown how you do it in AccuCharts. Let's take a look at Pro Realtime now. Here is a chart in AccuCharts. It's a 1 minute. What I was hoping to do was just start from scratch with the 2-day default, and what it would show you is that you can't plot an 800 EMA on a 2-day version of a 3-minute chart, but for some reason it's not letting me do that now. And so what you'd probably find your generic default in this chart platform, 3 minutes, would be either 1 day or 2 days, and you wouldn't get this 800 EMA. What you can do to address that is you go here to this this drop-down window here. I don't know what it's called. It's just one of 3 on the top here that allows you to specify the time frame for the chart. So what you want to do is go all the way down here to All Data. Click that, and you'll get this really scary looking mess. It just shows you that it's compressing an absolute boatload of information. And that's all the data that's available, basically, and I don't even know how many bars or records that is. But once you click All Data, you can scroll through the chart and you can see we're going back. There's March 4th, it just sped by, March 3rd, into February 27th. You know, we've got weeks and weeks of data here on this 3-minute chart, and that's really nice actually if you want to go back and kind of back test the system a little bit more, check out the results that you might have had over the past few weeks of trading. Again, just click all data and you'll get a nice wide time frame on this 3-minute chart or 5-minute chart. Well, you can do it on any time frame you want. If you click that for a daily chart, you'll get many years worth of data here. So that's how you address that fact. If you want your 800 EMA to pop on the screen and you don't see it otherwise, go in and adjust to all data and you will not have that problem anymore. Now, I can't address how to deal with this issue on any other charting platforms just simply because I don't use any other myself. I don't know what you do in MetaTrader. It's a very sophisticated, very popular program, and I assume that's for good reason. Maybe if there's somebody out there who knows how to do it, MetaTrader, you could send me an email and let me know. Those are the only two charting platforms that I know of. Anyway, I hope that's helpful. Just try and adjust the time frame wider for that chart, and you should see some positive results. Next question: do I really have to wait until I get a parabolic reversal? Can't I just get in with an SMI crossover? I'm going to take a look at the chart now, see if we can address that one. Okay, the title of the slide probably says it all. Jumping the gun ahead of a parabolic reversal within this Four Sisters trading system usually won't add much value, and I'd like to just show you an example. Here we've got the crossover, right? SMI is crossing up through the -40 line. Here is the other event that's specified by the trading system, which is a parabolic reversal from red to green. So let's just line up these two events and see how they stack up in terms of price action. If you're to enter the trade just on the crossover on SMI, in this particular example, and I don't even have the date stamp at bottom, but it doesn't really matter. This is for pound yen, of course. You're looking at a time stamp on your entry of 15:33 Eastern Standard Time. That's 3:33 in the afternoon, and the price you would have gotten on this trade was 206.78, and that's to get in right here on this tiny little candle. It's so small you probably can't even see it, but right here. Now you can see on this chart, if you were to just wait until parabolic flips from red to green, you've only got 1, 2, 3 candles intervening here, right? It's not a big wait. So the entry point, the more conventional way that we've talked about, would have been 15:42 Eastern Standard Time at a price of 206.85. So the difference is, on this particular example, 9 minutes, waiting an extra 9 minutes, and if you did that, or sorry, if you avoided doing that, if you took the earlier entry, it would have gotten you in 7 pips earlier. So I guess you have to ask yourself the question, is it really worth it? I mean, is 9 minutes really a big deal? Is 7 pips really a big deal? I personally don't think so. This is just one kind of ad hoc, off-the-cup example I could find here. You can do this over and over again and just prove it to yourself. Just see what you would have gotten by jumping in earlier. I wouldn't personally recommend a more aggressive entry technique. This is already a pretty simplified trading system. There's not a lot of analysis you got to do. There's not a lot of triggers. There's not a lot of conditions to satisfy. We're only working with 2 time frames, which is, anybody can do that. So I guess the question has to be asked, do you really need to? I mean, we're only going for 25 pips in this system, and carving out an entry of, an additional 5 to 7 pips in your favor. Is it going to make a big difference? I don't think so. And in fact, sometimes you could actually find it works the opposite, that if you get in before you have that additional secondary trigger of the parabolic, you can find that you're actually getting in too early and price will just keep going against you, and you might find yourself actually getting stopped out. It's just nice to have those, 2 triggers instead of 1. Just adds a little bit of extra margin for safety on the trade. So, pursue it however you wish. That's just my recommendation. I don't think it's a big deal to wait for that extra trigger. Not a lot of time, not a lot of pips, and it just provides a little bit of extra certainty on the trade. And again, the last question in the mailbag. I keep getting stopped out. I'm trading on the wrong side of the trend. What do I do? I don't mean to be facetious when I say this, but I don't know why you would be trading the wrong side of the trend. Unless you were to realize after the fact you misread your chart or something. Again, folks, this is designed to be a real dead simple trading system. You read the trend by looking at the 4 EMAs, just like we said back 4 lessons ago on this subject, and they all stack up the same way, then you look for a trade. If they don't, and they're wibbly wobbly and kind of crashing into each other, not a trending market, then you just don't look for a trade. And so if the trend is down because all 4 EMAs are stacked bearish, then you look for a short. If they're stacked bullish, you look for a long. And if they don't fulfill either of their criteria, then you either don't do anything at all or you apply a different trading system. Maybe go back to a more traditional kind of top-down trend lines, pivots, that sort of thing that we've documented elsewhere in this program. But, you know, this is so simple. All you got to do is follow the rules. It's about as close to a mechanical trading system as you can get. So, you know, there's no reason to trade against the trend. I don't know how to put it simpler than that. But why don't we do, what we'll do now actually is, this provides a good segue into another agenda item that I was going to talk about, which is just taking another look at how to use the 15-minute indicator as a validation signal for a 3-minute setup. So let's do that right now. So let's take a look at 2 charts, a 3-minute and a 15-minute chart for pound yen. This is for February 28th, and the timestamp here is 22:03 Eastern Standard Time, a little after 10 o'clock at night in New York. And we can see very clearly on the 3-minute chart here, the trend is what? It's down, right? You shouldn't be thinking any direction other than short at this point. This is a very nice trend reading here. It's about as good as it gets on this 3-minute chart. So we're thinking short. We have our 2 requisite signals. We've got a really nice, sharp, punchy, overbought peak reversal on SMI here in the background. And then we go, this is probably about 15 minutes or so ahead of time, maybe a little bit longer. And again, we're waiting, right? We're waiting until we get this parabolic reversal. It's a trigger. It's just a real nice, simple, easy to work with trigger. Otherwise, you know, where do you get in? You could get in any old place. But anyway, so the reversal that we were looking for came at 22:03. So by the textbook, this says, well, do we go short? Yeah, on this time frame, it certainly suggests that. But look what would have happened if you had gone short here. Price would have gone in your favor. And actually, if you were lucky, I can't get my data table showing up here. This is just a screen capture. But anyway, I'm not sure if this was 25 pips or not. I don't think it was. Price went a little bit in our favor, then it bobbed around a little bit, and then it came back against us. And as you can see by this higher wick to the right here, would have taken out the parabolic stop back here. We would have gotten stopped out on this trade, even though we were going short, even though the trend was down. And why is that? Why would this trade not work? Well, remember, we have to validate our entry signal on at least one higher time frame. And by taking the view that you can just use simply a 15-minute to execute a trade for 25 pips. I mean, that's not the best trading form in the world. You know, the pros, they're looking at multiple time frames, and we've gone over this before, looking at everything from a 3-minute on up to a weekly chart. We're saying you can avoid that if you're only going for 25 pips, but you gotta look at least one higher time frame, in this case the 15-minute chart. So let's see if the 15-minute was giving us any clues as to why 22:03 was not a particularly effective time to go short on this trade. Here's the 15-minute chart, and this vertical line here just tees up where we were on this chart at the time that we saw that signal on the 3-minute. This is 2200, the 15-minute candle here, right there. Again, a very small candle. And you know, you can take a look here at the SMI on the bottom, and this is how you validate. You look at the SMI and you're saying to yourself, okay, the 3-minute is telling me I want to go short. I know the trend is down. The Four Sister setup is bearish on the 3-minute. It is also on the 15-minute chart. In fact, we just got a death cross here. This would have been the 400 EMA punching through the 800 EMA. Nothing but red ink up here. Okay, so I've got my high-level trend indicators are all very bearish. So I'm trading with the trend. I'm trying to go short. However, it's not enough just to find out the trend. We have to time it well as well. SMI at this point had gone very deeply oversold, and as you can see here, was just turning the corner, crossing over bullish from this deeply oversold read, and was subsequently wanting to go in the northerly direction here. And then eventually we got kind of, I'd call this a lateral crossover. It's not quite overbought, but in a downtrending market like this, it's certainly good enough. This is kind of, this is a little bit interpretive, a little bit of an interpretive art here, but is this an ideal crossover? No, it's not. But it's superior to trying to go short somewhere like this, where we're already deeply oversold and we're just starting to cross over. I would not buck the trend against SMI down here. I would not buck the trend against SMI as it's crossing the -40 line. I would certainly want to see it punch above the 0 line and then cross back over in the opposite direction on the 15-minute chart. And as a matter of fact, this shows how we could have just executed the entire trade right off this chart here, because a couple of hours later we got both the crossover and the parabolic flip happening roughly at the same time. This would have been a reasonable stop here, not too many pips, and you can see it was just a beautiful trade to the downside after that. So that's kind of in a nutshell how you do it. You know, if you see the setup on the 3-minute, always take a look at your 15-minute chart. And the general rule of thumb is, as long as SMI or whatever indicator or indicators you're using are not just starting to cross over in the opposite direction, not trending strongly against you in the opposite direction, then you're okay. Wait for the indicator to have blown off some steam. I think Seth Gregory uses a term, he calls it pressurization. This indicator here was very pressurized. It was very oversold. We wanted to see the market blow off a little bit of steam, let go of a little bit of that pressure, and then when we cross back over, we're ready to continue on down here. I could have drawn some Fibonacci's, I could have plotted my pivots, I could have done all that stuff, but I just wanted to focus on the indicator alone. You can see at the time that we were looking at the setup on the 3-minute chart, this thing was just way too much orientated in the opposite direction from where we want to go. SMI, you got to be above 0, you got to be turning over, you got to be crossing back over. If we were looking at MACD, either the standard MACD or the zero lag MACD, we wanted to have seen some kind of similar behavior coming back to at least the waterline, preferably above, and then crossing again bearish. So that's what we would have had to do, is just wait for a couple of hours and count on a secondary entry signal on the 3-minute chart. So I hope that's fairly intelligible. Again, first of all, the trend reading, it's easy. It's designed to be easy, and I think you'll agree this is very easy. The trend is down, we're going short. But to make sure you don't get stopped out, you don't want to put yourself into the trade just ahead of a potential pullback or retracement, which is what this indicator reading was suggesting was a possibility. You can see we came down nicely. We didn't even go back too far in the opposite direction, but just enough that you could have gotten stopped out if you were a little too eager on this trade. So always, please validate on at least one higher time frame. Proper trading form is you probably want to look at a couple. But for the purpose of grabbing 25 pips, the 15-minute will do you just fine. And you can see this thing actually collapsed really nicely. We're at about 208 around here, and this thing went down another 300 pips in the ensuing action here. So that's it for our mailbag. Now let's take a look at the opportunity rundown for last night. We're going to look at 4 pairs, 4 fairly mainstream, non-exotic pound cross pairs: pound USD, Swiss, yen, and Aussie. And we're going to look at the chart whether they offered up an opportunity or not. So we're going to start with pound USD. And again, this is for March 6th. This is last night now. We're almost 24 hours later, but anyway, it doesn't matter too much. Again, Four Sisters, when you see this stacking bullish like this, this is an easy trend read. What is this? The trend is up, right? Not a problem. Now, I'm just putting in here brackets. I know because I looked at the 15-minute, the trend was also up there. So I'm just putting that in as a reference. The intraday trend at the time, heading into the European session, was up. So we had SMI cross bullish from the deeply oversold region down here, and then we waited patiently for a parabolic reversal, and we got it here. 2:45 Eastern Standard Time at around about 99.20 thereabouts. And you know, if you were doing your homework, if you're doing this is the reason why you do want to kind of do more of a top-down analysis if you've got the time and inclination for it, is because you could have carved out a lot more than just 25 pips last night. This was a good entry signal system, but technicals were suggesting that we had a lot more room to the upside than just 25 pips. And you can see we went from 9,900 thereabouts to, I don't know if we cracked 2.01, sorry, I should say, but you know, that's what, 200 pips easily. So anyway, 2:45 Eastern Standard Time. If you wanted to just take the little scalp the Four Sisters, you can see that your stop would not have been threatened, no drawdown at all, and you would have had 25 pips in your pocket in mere minutes. Now the nice thing is, if you hung in there for a few more hours, if you're able to stay up that late or fit it into your day, depending wherever it is that you live on this globe, we had another trade, another opportunity to the long side, coming about at 6:33, almost not quite 4 hours later. On this 3-minute chart, the trend was still up, no question whatsoever. The 15-minute was just bobbing along really nicely. So what this was nothing more than a counter trend retracement. It looks like it was probably to the 62% level, just eyeballing this thing, and then we had another deeply oversold bullish crossover, another parabolic reversal, and there's your chance to go long. Again, no test of your entry here, no drawdown, well, a wee little test here, but nothing scary or dangerous, and you know, you would have had 25 pips inside 2 hours for sure. So in a single night of trading on this one chart, you had two opportunities worth potentially well over 25 pips. And if you wanted to try and grab more of them, you could have certainly used either a technical target, a fib extension, trendline projection, something like that, or a pivot even. You could have limited it out on this R1 pivot, this orange line here. We talked about that last time out. Lots of different opportunities, but at the barest minimum, you could have grabbed 50 pips here on pound USD last night. Pound yen. On the 15-minute, the trend was flat. I didn't see a trend. On the 3-minute, what do we see here? Let's see, the London Open, again, I apologize, I don't have the timestamp. I think we're looking at around this area here. And we're looking at midnight GMT somewhere back around here. You know, these nominally were stacked bullish here, but heading into the London session, I don't know. There's not really very strong slope on these lines. They're pretty flat. Technically they're stacked bullish, but we're starting to see some curl around here. They're not pointing either up or down very clearly. They're running kind of flat. So I'm kind of looking at this and I'm going, well, I don't really have much of a trend at all to work with. And I'm going to be picky. I'm going to be choosy. I'm not going to force the trade. I'm not going to do anything